Hi to IPO subscribers. Welcome to eaglelive.ai. Today, our presentation is on IPO from SHANKESH Jewelries Limited, a main board IPO. As I have been telling your people, fundamentals of any company is important to subscribe IPO. Here, these fundamentals are prepared by AI-powered software and as per in metric. So as I was telling, for any IPO, subscription of any IPO, the fundamentals of the company is very important. The problem here is, as we don't have the system of categorizing the company into healthy and unhealthy defaulting companies, SEBI has been allowing all the companies to access the publication, and it is the investors who have been paying the costs. So we do comprehensive analysis and categorize the company into healthy and unhealthy defaulting inventory companies to safeguard the investors' hard-earned money. Based on the metrics given to the software, the AI-powered software has categorized this company as a healthy company. And let us see what are the financial strengths that made the company healthy company. So first is health analysis, solvency. Solvency ensures the sustainability, whether the company can withstand or not. So here all are positive. So sustainability is very strong. And coming to liquidity. Liquidity ensures the survival of the company. Here the current ratio is 1.99, very good. Quick ratio is 0.75. In general, it should be 1. The reason why it is less than 1, it can be because the current ratio is 1.9. The inventory levels may be high. That is the reason why maybe high in the total current assets. That is the reason why quick ratio is 0.75. Otherwise, it's okay. So coming to operational efficiency, inventory turnover 7.22. In general, we expect 8 to 10. And gross margin is very less. Maybe in industry-wise, the gross margin will be less, 6.26. But company is healthy, So otherwise, everything is okay. Operational efficiency is okay. And this will be changing from time to time. So coming to financial irregularities, that is the financial frauds, no financial frauds. Thank God. Profitability. Profitability EBITDA 158.04, EBIT is 156.73, PBT 143.39, profit 108.02, EPS is 9.09. Okay. EBITDA margin is 9.69, net profit margin is 6.54. Of course, a little bit less. Generally, we expect 10%. And EBITDA margin also, in general, the what you call So ROC is 41.31, ROI is 68.82. Book value per share is 17.81. So cash flows from operating activities positive 33.2. Net cash flow for the year based on the IP good. Price to book value 5.22. It's at the higher side. But let us say projected PB, then we are a healthy company. And now let us go on IPO-Review. This is the IPO-Review of SHANKESH Jewelers IPO, attractive PE, of course, expensive PB. So let us find out whether this jewelry company deserves investor attention or not. Business overview. SHANKESH Jewelers Limited is engaged in handicraft gold jewelry and customized jewelry. The company follows an asset-light model, outsourcing manufacturing to skilled Karigara job workers. It manages the complete process from design and material sourcing to finished jewelry delivery. Its customers include established jewelry companies such as Joyalcos, Kandan Jewelers, and Pigeon Gurgel and Novel Jewels, among others. The model allows the company to operate without making heavy investment in manufacturing infrastructure. Very good. The broader jewelry opportunity remained attractive, but the business is expected to gold price volatility customer concentration, and depends on third party developers. Key business strengths, strong relationships, asset light operations, customized jewelry capable. Very good. Financial and business health, positive. Revenue has expanded significantly. CRISIL estimates FY26 revenues at approximately 1,630 to 1,640 crore compared with the around 1,400 crore. Of course, almost 80%. Net worth is estimated to have increased substantially to more than 210 crore as of March 2026. Debt protection metrics have also improved, with estimated interest coverage above 12. Very good. One is good. But remember, jewelry is a low margin, high volume business. Of course, the latest annualized figures indicate approximately revenue 1,403.8 crores, EBITDA 65.5 crores, PAT 40.3, EBITDA margin 4.66, PAT margin 2.87. So this is the gold means engine. The percentage of revenue will be, percentage of profit will be very less. So even with strong revenue growth, margin sustainability is important. Valuation, the key questions. At IPO, the 930 price, EPS 9.09, PE 10.23. This looks reasonable, attractive, of course, but PB is 5.2. It is at the higher side. This is expensive. So we have a valuation contradiction. PE says reasonable. PB says premium valuation. The projected PE of 8.61 looks even more attractive, but it assumes continuation of an exceptionally high growth rate. Of course, eagle eye view on valuation. Current PE attractive, PB expensive, projected PE attractive but growth dependent. Overall valuation reasonable, not deep value. As a cross-check available PE data shows, SHANKESH business profile has historically generated strong return on net worth, while listed jewelry peers have traded at considerably higher PE multiples. IPO money, where it is going. The fresh issue is 274.18. Major utilization is 158 crores for debt repayment. Their company can save some interest. Even if we take 10% interest, the company can save 15.8 crores. And even if we say 30% is income tax. So let us say around 10 crores is the additional profit for the company because of this IPO. And 38 crores is the working capital. Let us take percentage of profit is very less, So on overall, the company can expect around 20 crores profit from this source of funding. That is 196 crores, 158 plus 138 or 196. Here, the concern is that 78.118 crores is going towards general corporate purpose, which is very high. Almost, I should say, more than I should say 30%. 30% of the funding is going towards general corporate purpose. This is highest side, not acceptable. Investor view, public money, in general, so some sort of negligence. Investor view, this is a positive factor because debt repayment can reduce interest burden, strengthen the balance sheet, improve financial flexibility. But investors should also note that IPO includes a substantial OFS component of 93 crores. Meaning, part of the issue represents selling by existing shareholders. Existing shareholders are getting 93 crores from offer for sale. So, key risks, third-party manufacturing, customer concentration, that is a large established customers are a strength, but dependence on a limited customers base can become a risk. Gold price volatility, changes in gold prices can affect inventory, working capital and margin, and related party transactions. Related party transactions require continued monitoring from governance perspective. Of course, it's common in all the companies. There's nothing what your people can do. High growth expectation, the valuation becomes particularly attractive only if the company's exceptional growth continues. competitive industry. The jewelry industry has numerous established players and intense competition. These risks are consistent with the company's disclosure business risk profile and external analysis. Coming to market sentiment, market backdrop positive. India's IPO market is currently experiencing a busy primary market period, with several companies coming to the market this week. SHANKESH Jewelers is among the IPOs scheduled to enter the market, reflecting continued investor in new things. Here the problem is, as we don't have the system of classifying the companies into healthy and unhealthy defaulting. See, most of the people, they don't know this company is a healthy company. So if they know this company is a healthy company, there will be good test spots. But how many of people can see our video? So in general, we can expect the competition also will be there. For SHANKESH Jewelers specifically, the jewelry sector is attracting attention because of strong gold price environment, formalization of jewelry retail, growth of organized jewelry players, strong investor interest in jewelry-related IPOs. However, high IPO activity also means investors have multiple alternatives. So, valuation and institutional participation will matter. What to watch during the IPO? QIP subscription is the most important sentiment indicator. Strong QIP participation would improve confidence in the valuation. Of course, final investors scorecard. Business model positive, customer base strong, financial health healthy, growth strong, PE valuation attractive, PB valuation expensive, for debt reduction positive, and governance watch. And industry competition, moderate risk, market sentiment positive, overall positive with caution. Final investor view. SHANKESH Jewelers IPO is an interesting growth-oriented opportunity, but it is not a deep value IPO because of PB. The 10.23 PE is the biggest attraction, while 5.2 PB is the key valuation concern. If you are prepared for 5.2 PB, of course, we can go ahead because the company is a healthy company. And the company's asset-light model, established jewelry clients, strong growth, and proposed debt reduction are significant positives. Of course, I do agree. And but investors should not blindly extrapolate the exceptional historical growth rate. Sustaining earnings growth and maintaining margins will ultimately determine whether today's valuation proves attractive. Eagle-eye view. Health status healthy. Valuation reasonable, attractive on PE. Key concern high PB, growth sustainability. And market sentiment positive. Final question, is a SHANKESH Jewelers IPO worth subscribing to? Yes, but with the valuation discipline. Suitable for investors looking for a growth-oriented jewelry business and willing to accept moderate risk. As always, investment decision should be based on your own financial goals and risk tolerance. Thank you for watching. If you found this analysis useful, please like the video, subscribe to the channel, and stay connected for more detailed IPO and stock market research. Thank you very much.